Thanks very much. Our next speaker is Ravi Patel. He's going to be talking to us about innovations in payments driven by API first technology. Now, Ravi is the managing director and head of partnerships at Episode 6. He's a banking and now fintech entrepreneur, and he's the managing director of Episode 6, which is an innovative payment processing technology company. So please welcome Ravi.
Hello, hi. Thanks for the introduction, Graham. And thank you for sharing the slides. Great. Okay, well, let's jump straight in. First of all, just a quick overview of the scope of the discussion here. We're going to be talking about payment technology APIs, and specifically around payment issuing. So if you think about a typical payment, there's the issuing and then there's the acquiring side. The acquiring side would be sort of handled by the merchants and names like Stripe. We're not going to be covering that side. We're going to be focusing on the issuing technology side. And I'm going to keep the conversation focused around payments. There's been Todd Brankus was talking earlier on about the sort of open banking and looking at how APIs are used across the banking stack, but I wanted to really drill down on the payment stack. And in terms of the agenda, what I'm going to do, I want to sort of spend a few minutes just setting the scene, looking at some of the macro payment trends. I'll explain a little bit about the evolution of payment systems and how we're sort of arriving at a sort of an API first model. And then I want to kind of, in terms of the kind of core part of the presentation, really look at some examples of innovations that have come through API first models in payments, and then I'll refer to Episode 6 technology as well, which is a good example of some of those technologies being put into practice. First of all, just a quick introduction about myself. As Graham mentioned, I'm the managing director for Episode 6, a next-gen modern payment processing technology, working with issuers such as banks and fintechs to help them make payments. Prior to this, I've got a sort of a 20-year approximately career in various banks and fintechs across Europe and Middle East and Asia. Yeah, cool. I think I'll just jump into the presentation then. A little bit about Episode 6, just to kind of give you a context in terms of where we're coming from. Episode 6 is somewhat innovative, somewhat new to the market in terms of basically offering a full stack payment technology platform. We operate across issuing, which would be typically cards and virtual cards, typically through the large schemes, the Visa, MasterCard, and other major schemes. We also offer other payment capabilities, for example, what we call E6 Connect, which is a technology that allows you to build closed loop payment systems. So if you're a large conglomerate or you're a large bank and you've got multiple assets, you can basically connect all your assets together onto a single payment system. It doesn't necessarily have to go through the large schemes, so you can save a lot of cost there. But there are a lot of examples now where these closed loop systems are becoming more attractive, in particular for the larger organizations. We offer what we call E6 payment orchestration, which essentially is a technology that allows any bank or issuer fintech to connect into any payment system, literally any payment system. It could be a domestic payment network, it could be a regional, national payment network, it could be a cross-border payment system, it could be a loyalty, a non-fiat system, such as a loyalty program or a digital asset, a cryptocurrency platform. It allows essentially issuers to basically connect into all these different venues so that they can provide these services to their customers. So that's essentially a new orchestration layer that we provide that. And then what we call E6 wallets, it's essentially a ledger that allows you to build any payment product. So you might want to think about sort of kind of traditional products, such as things like credit cards, which again is a payment product with the features of typically a monthly credit cycle with interest and various other sort of features on it. There are more innovative products that's starting to be developed in the market, largely through the availability of modern technologies. You're seeing a lot of noise around things like buy now, pay later, and other various innovations, which I'll talk about later on. But essentially, Episode 6 brings all these capabilities together on a single platform and allows banks and issuers to deliver these quickly and with full flexibility to dominate their markets. Again, just to kind of illustrate what I meant by the difference between the issuing side versus the acquiring side, as I mentioned before, what you can see in front of you here is the typical four-party payment model, which is typically how the card schemes work. On the right-hand side, you've got the merchants, which are supported by acquirers and acquiring banks. On the left-hand side, you've got the consumer or the end user that's supported by the issuer. That would be the issuing bank or the issuing fintech in this case. Now, what my assertion is here is that, in the last sort of 10, possibly 20 years, we've seen a lot of innovation on the acquiring side, sort of largely started by players like PayPal, who sort of came along and sort of said, the banks were very difficult to sort of set up merchant accounts. It took a long time. It was complex. There was limited capabilities. It wasn't designed for online. PayPal came along and sat in between the acquiring banks, the merchant banks, and basically it made it easy for businesses to set up. And then you've got a large range of innovation that was largely driven through internet payments, online payments, e-commerce, and various other sort of hardware innovations at the point of purchase, whether that's in store or online. So you're seeing a lot of these innovations happen on the merchant side, and I would make the claim that we haven't seen enough innovation happen on the issuer side. There are some examples of things that we've all experienced in life, things like NFC or things like Google Pay and Apple Pay, where you can use your device and make a payment in store. You're seeing that sort of develop. Certainly in the more mature markets in Asia Pacific, we're talking about places like markets like Singapore, Australia, New Zealand, and you could argue that it's developing in some of the more developing emerging countries in the region as well. You're seeing essentially the advent of more products like virtual cards, which are becoming quite popular in the business segments, in the sort of the enterprise segments, where companies can issue virtual cards to make instant payments, instant secure payments to suppliers. Is a good use case there. And the other thing is, which is sort of, it's started, but we really haven't seen we haven't seen any sort of real momentum here around things like real-time payments, account-to-account payments, and really interesting things like request to pay, where basically a merchant can basically send what's called an R2P to a consumer, that then allows them to basically automatically send a payment to a merchant, and these are all account-to-account payments. So it's simply going from one account to another without the need to go through these large schemes. Again, the technology exists, the capabilities are there, but we're not seeing that much adoption to it. So again, my point here is that there's a lot more innovation that we can expect to see on the issuer side, and I believe API technology would be a key enabler, as I'll explain later on. Some more context here. This was a sort of an article that references an IDC research report that looks at the future of payments for banks and other enterprise companies that issue payments. Interesting headline here is that by 2030, 74% of consumer payments will be handled by non-FSIs, so essentially non-banks. So these could be fintechs, wallets, these could be consumer brands, with the advent of what's commonly referred to now as embedded finance, where an e-commerce platform could be providing financial services, including payments and other sort of credit-related products. These players will be taking an increasing share of the market. As you can see here, that they currently account for about 60%, and that's increasing to 74%. So that's quite a significant movement towards non-bank originated payments. And again, that's not to say that banks are losing market share, but essentially their role may be different. They may be more at the back end. And again, that would advocate for the need for APIs so that the digital front end platforms can engage with banks in a better way. But again, we'll get into that later on. To drill down a little bit further, again, I don't want to spend too much time here, but I do think the context is quite important in terms of what's going on in global payments. So, the need for real-time payments is probably probably one of the largest macro trend. It seems like a very obvious thing, but I'm sure many of the elder people in this forum would sort of remember, maybe not even that long ago, maybe 10, 15 years ago, where it would take at least 3 days to make a payment, account to account, and that's even domestic markets as well. So there's certainly been some developments in sort of real-time payments, account to account payments, but there's an argument that there could be a lot more innovation happening there, as I mentioned before, in particular when it comes to real-time payments with businesses, which is where the significant volume is. We're seeing an increase in the proliferation of different asset classes. So payments has historically been, at least mainstream payments for banks, has been around traditional fiat currencies. We've seen the evolution between quite simple domestic currency payments businesses towards multi-currency payments businesses as our planet has sort of globalized. What we're also starting to see now is banks and fintechs really start to think about non-fiat currencies and how they can help manage that for their clients. So if you think about loyalty platforms, you think about cryptocurrencies, and even the conversations now starting around CBCD, the central bank digital currencies as well. So again, how can a bank basically handle and manage all those payments across all the different asset classes for you? This is a sort of a challenge that the industry is sort of increasingly facing right now. In parallel, we're seeing a lot more competition. So, we're seeing regulators issue more licenses. We're seeing more players get into the space, non-banks. Well, in the banking space, you've got typically the challenger banks, these are sort of modern greenfield technology stacks. But then you've also got the adjacent entrants. You've got sort of in Singapore, you've got, let's say, for example, a ride sharing company that's now getting into banking space. You've had telcos get into banking space. You're getting these consortiums, including consumer groups and other various types of conglomerates getting into banking now as well. And all of this does is it's creating more competition, which eventually is a good thing. And it's really sort of starting to sort of force incumbents to innovate and drive the adoption of modern technologies, which is, I think, something we can agree is good for everybody. The fourth point kind of relates to that as well. Again, whether it's API technology creating standardization around how systems interact with each other, or whether you're talking about things like artificial intelligence and how companies can work with models that can process vast amounts of data and create automation around decision making, in new forms of intelligence, and whether that impacts the consumer experience or whether that impacts things like fraud management. All of things are good things. Yeah, and and the kind of the last kind of key point is kind of largely supported by API technology, which is around the need, the demand for full interoperability, which is to say that how can one consumer basically make payments to any venue as seamlessly as possible in real time, and that really requires the industry to basically connect up all the systems together, all the dots, so that those experiences can be delivered. I won't go through the statistics on the right hand side, but I'm happy to share the slides later on. Give a little bit more context around the system evolution. Again, this was taken from that same IDC research reports. What this table simply shows you is that there have been some different generational builds of issuer processing technology. The first generation, we'll call them early legacy. These are the guys that were essentially the pioneers of modern card payments. If we think about the tier one banks that have been offering credit cards, initially credit cards were sort of a very premier type of product, which allowed the wealthy to basically make convenient payments using credit facilities, and as that's become more mainstream, then we've seen credit cards develop. You've seen the development of things like debit cards, and then things like prepaid cards have become quite popular in specific sort of niche areas, whether it's things like gifting or government disbursements and certain other use cases. So what we've seen is a development of different types of use cases, and as you've seen these developments, then the systems have had to evolve to support them. But safe to say that the earlier systems were designed very simply for specific use cases, and as the systems have developed, they've had to sort of build in flexibility to basically allow the issuer, or driven by consumer demand, to basically provide more configuration. Arguably, the sort of the internet era was a significant shift in terms of orchestrating payments. We've seen the need for platforms to allow payments to be triggered through internet platforms, and again, that needs full connectivity to the payment system to authorize and settle those transactions. So the digital era has been somewhat of a significant point in the development of payment systems, and then to some degree, you can argue that the continuation of that has been through the advent of mobile technology, which has really sort of driven payments to a new environment where the payment is not necessarily determined by the consumer going to the branch or the consumer going to their computer. It was driven by on-demand need for payments. You want to make a payment whilst you're on the train. You want to make a payment whilst you're in the taxi or being driven somewhere, or when you're in the store. And all of this has required the need for systems to connect and for payments to be authorized and settled in as close to real time as possible. So what we're advocating for here is the fact that the digital native and coming soon the future ready systems, they really need the flexibility to basically evolve to connect into different payment systems and venues, and to basically allow experiences that are sort of consistent with how consumers and businesses are operating today. Largely, the digital native platforms, the experiences are driven through API technology, which is to say that these aren't necessarily hard-coded integrations. These are sort of internet-based connections that, as I'll explain later on, have a significant number of economic benefits and give businesses the flexibility to shape their model as they develop. Cool. Next slide. I won't spend too much time here, but this is a sort of a traditional view of the payment ecosystem. This is somewhat biased towards the US, so we may not see so many names here. But the point is traditionally, the payment ecosystem has been is defined by your processors, your card networks, your merchant networks, the issuers, gateways, ISOs and MSPs, and then your non-card payments also there. What we're now sort of starting to see, and this is largely driven through API technology, is a broadening ecosystem of players that are able to add value to the payment. Let's call it the payment lifecycle. I've kind of clustered these around 4 areas as far as I can see it. And these are evolving, so maybe there'll be more clusters, or maybe there'll be more details here. Well, hopefully there will be. But the first one's around sort of the more, I'd say, sort of as I say, regulatory and compliance aspect of it. So when you want to sort of issue payment systems, you want to do it instantly. You want to basically do instant KYC to basically allow someone to, let's say, set up a virtual card. So something that's kind of cool right now is that in the olden days, if you wanted to sort of set up a credit card, you'd have to apply for it. You'd have to wait for the plastic card to arrive in, say, 1 or 2 weeks, and then once you've got your PIN mailer and all that sort of jazz, then you're good to go. And that's a long process. Now you can sign up to a card, and within minutes you can have a virtual card with a full PAN number set up on your phone, and all of that is allowed because of instant eKYC, where the bank, the issuer, is able to validate your identity and confirm that you're good to basically have this product. There are also really interesting capabilities around fraud. So with the sort of significant growth of digital online payments, there's the increasing ability to basically there's a growing demand. There's a growing need to sort of defend against fraud, and through APIs now, there's a lot of vendors that are now emerging that are quite sophisticated in fraud detection, and these technologies can be plugged into your payment processor for your issuer, and really start to add incredible amounts of value that typically a bank wouldn't necessarily be able to develop themselves, because they're not fraud companies, they're banks. So again, in this space here, there's a lot of innovation that's enabling real-time set of payments, real-time monitoring of payments. Then if we go to the right-hand side, you've got the customer engagement. And this is exciting as well, because I'd say one of the major trends in products, in payments, is what I'm kind of increasingly hearing is around the productization of payments. And what that is to say is that payments are evolving from being a utility, where it's simply about moving money together, towards creating products and experiences out of them. And there are a lot of companies out there now that are sort of delivering services through API that really enable these innovations to sort of come to market. You've got anything from things like front-end platforms, where you can basically get sort of products, things like wallets as a service, and you can simply plug in and kind of good to go. You've got a lot of transaction enrichment platforms which are emerging, which I think are super exciting. So anything from things like finding out your sort of carbon footprint, for example, on transactions, your sustainability scores, geolocation, merchant data, all of these things basically you can plug into your payment technology through APIs, and you can provide all these services that will help you differentiate in the market. Automation is something that's critical, especially if you think about how do you create profitable and sustainable payment companies. Automation is quite key there, and there's a lot of technologies around there that are automating things like onboarding, credit decisioning, which will then determine credit facilities, things like physical card personalization. A lot of these things can now be automated, and again accessed through APIs. And on the bottom right side, very, very importantly, APIs also are enabling much more interoperability between different payment systems, including those of different asset classes as well. So typical processors, historically have focused on, let's say, cards, but as I illustrated to you before with episode 6, you can offer processing for cards, also for real-time payments, account-to-account payments. It could be a loyalty exchange payment. It could be a digital asset or a cryptocurrency conversion. So we've now basically launched products for players around the world, where, for example, take for example in Japan, we have a client where you can spend your Japan Airlines points in real time at a merchant. You can buy a bottle of water using your air miles. We've got a client in Thailand where you can basically spend your Bitcoin in real time at a merchant. So again, all of these experiences are driven through system interoperability, and again, all this interoperability is driven through modern API standards. So very cool things happening. A bit more from a theoretical perspective here. But what's critical here is that if you think about the in between the issuer side and the merchant side, you've got a lot of capabilities that allow you to standardize your connectivity and provide secure connection points between your different systems. So I'm just throwing off. I think my slides have been taken down. I think I've overrun the time. Hi, Graham.
Hi, Ravi. Thanks very much. We are just about at time.
Yeah.
So I think we'll say thank you very much and move on to the next one.
Sure. Thanks, Graham.